Hey everybody, Rob Maurer here. Happy Friday. Today we are going to be talking a little bit more about the broader market. A lot of interesting things going on today. We do have a few Tesla news items, including China production for February. Looking at the stock, interesting day for Tesla to pick its first green day for the week, up 0.3% on the day, closing at $173.44. The Nasdaq down 1.75%. Obviously, a lot of this having to do with the collapse of Silicon Valley Bank, which we'll talk about here in a second. Really quick though, let's just get through some of the job data that was reported this morning. 311,000 jobs added in February. This is down pretty significantly from the massive number from January. It was a little bit higher than expectations, but the unemployment rate did tick up a little bit, 3.4% in January, now 3.6%. So obviously these will have bearings on what the Fed decides to do with interest rates in about a week and a half. Also relevant to that is the news for today of the collapse of Silicon Valley Bank. This is the second biggest bank collapse in U.S. history, biggest since, of course, 2008. Silicon Valley Bank closed today and is now being put into a receivership with the FDIC. So this is pretty massive news. Obviously, we talked a little bit about this yesterday. Collapses happened very quickly. It's obviously unfortunate. There's going to be a lot of repercussions of this. There's going to be a lot of fallout from this that remains to be seen, and how pervasive that is, again, also remains to be seen. But really big news here. I think the intent here, I kind of just want to explain to people sort of the situation and sort of how Silicon Valley Bank got into this so we all have a better understanding. Obviously, the fears whenever there is a bank collapse is that this is something that is, pervasive to other banks and other banks face a similar fate. So I think just understanding some of the issues helps with, understanding concerns and how valid those things may be. So I think for me, the easiest way to look at it with Silicon Valley Bank, obviously with things like this, there's always a ton that goes into it. But I think the easiest way to look at it is sort of two problems. And both of them are interest rate related, both tie into both problems, or interest rates tie into both problems. But I would say the first problem is that Silicon Valley Bank, as a VC and startup bank, it was heavily concentrated with those types of businesses. So you have deposit risk. Deposit is a liability for a bank because they then have to eventually pay that back if someone withdraws money. So if all of your customers are sort of in that same sort of VC startup world, that heightens the risk of all of them acting in a similar way. And as we know about bank runs, if your customers are coming in and taking deposits, if all of them wanting to do that at the same time, banks don't keep that amount of liquidity. So all of your customers being of the same sort of mind, acting in the same way, that heightens sort of that bank run risk. So a more traditional bank might have a more diverse set of clients that are less risk prone or less risky to act in sort of similar ways at the exact same time. And then obviously with interest rates, that's putting pressure on VCs and startups, which we've talked about a lot with Tesla as a growth company. Tesla obviously has moved a little bit out of that stage, and we'll talk about the impacts on Tesla. But when rates go up, it makes it more difficult for growth companies that are more reliant on financing rather than just being able to operate on the cash flow from their business. So that's sort of problem one, just having a concentrated set of clients in the VC and startup world. And then problem two, I would say, is that SVB was invested in long-term securities at really low rates from, a year, 2 years ago when rates were really low. When rates rise, the value of those securities fall. So that's not a problem if you hold those to maturity. They're still, you're still getting the same payments that you expected when you bought those securities. But if you bought those securities with customer deposits, and those customers want their deposit back, then you have to sell those securities. And if the interest rates have risen, the value of the securities has fallen, you then have to sell those at a loss. So that's what SVB tried to do to resolve some liquidity issues. That sends up a red flag. They also tried to sell some equity to raise capital, but that just, again, is heightening all of the problems that we talked about with the first problem, with causing concern, having customers come and wanting their deposits back, creating this bank run. And really that just creates sort of a death spiral. So that's sort of my take on what's happened here with SVB. Again, there's a lot of factors. That's probably not all encompassing, and definitely welcome people's feedback in the comments. But hopefully that helps with just getting an understanding of what happened with SVB. And hopefully that wouldn't be quite as likely to happen with another bank. They're probably, other banks are going to have risks with that second problem, having invested in securities that have low interest rates. But not really a problem if there isn't a bank run, and I think just the clientele base or the client base of SVB sort of caused that. So again, hopefully not pervasive, depending on what sort of banks and what their client base is like. Could be more risky than others, and we've seen that a little bit in the markets today with how other banks have reacted in terms of their stock. but it'll be very interesting to keep an eye on. And again, lots of businesses tied to SVB, so there's going to be fallout. We don't necessarily know all the ramifications quite yet. So all that being said, if we look at how this has changed sort of interest rate expectations, it's flipped back to where we were about a week ago. Now expectations for a 25 basis point increase at the next meeting have come back in favor in terms of what the market is expecting, about a 60% expectation on that, and then a 40% on a 50 basis point increase. And you can see how that changes from a day ago, almost inverse. So obviously this is, interest rates have played a role here, as we talked about, and that could cause concerns for the Fed of if they keep doing that, this could happen with more banks and obviously create bad situations. So that's affecting expectations, and we'll see how that changes over the weekend. There will be a lot more news coming out on this. As for Tesla, shouldn't be too much to worry about here other than just the general market with Tesla. Tesla's balance sheet in a great spot. Tons of cash. Here's the breakdown of their cash and cash equivalents. So, we talked about how Silicon Valley Bank was invested in sort of, low rate return securities. For Tesla, they do have some certificates of deposit, about $4 billion. They just put those in last quarter though, so those are still going to be pretty high interest rates. Even if interest rates continue to rise from here, Tesla not really going to be in that situation. And again, these are probably much shorter term than a lot of Silicon Valley Bank stuff, which I think was more like 10-year terms. We don't know exactly what the terms are for Tesla CDs. They do say that they mark any security with maturities greater than 3 months at the date of purchase, included in the short-term investments section, which would be here with the CDs. But again, most of it's in cash, so $14 billion in cash. Tesla likely has that well distributed among many different banks, also many different countries. So hopefully there's no, risk of Tesla needing to return sort of that deposited cash to themselves with any liquidity crunch or anything like that, having issues doing that. It's a lot of money, but Tesla probably managing it presumably pretty well. We just kind of have to assume that. And then in terms of cash coming in, maybe just something to sort of keep an eye on. This doesn't have anything to do with the cash on the balance sheet, but in terms of their receivables, no entity is representing more than 10% of their receivables. So, if there's risk of payment from, most of Tesla's money is coming from customers, so there's not a lot of risk there, like business to business wise. But in terms of the receivables, maybe for energy projects or whatever, there's no one major customer there that could be a major risk for Tesla. So hopefully Tesla pretty isolated, but again, overall market is going to influence things in general. So hopefully that helps with just kind of understanding where we're at. Again, a lot more information will come out on this, but we'll move on for now. So let's get into China. We do have an update from Wuhua today. He has posted a new video. Drone flyover of Shanghai says that it seems that the activity for Model 3 this week is not as high as last week. Last week would have been, I believe, the first week of restarted Model 3 production after a little bit of downtime there. Still unclear on exactly what changes that downtime implemented at Shanghai. But again, reiterating that Model 3 has obviously slowed down its production speed, and also says that it can be seen from Model 3 sales that sales in China are not very good. So those are kind of the reports from Wuhua. Obviously, the sales data is probably just talking about sort of insured or retail sales numbers that we have already talked about. I do have a little bit more information on that today. If we look at retail sales, I was able to collect the breakdown between Model 3 and Model Y. So we had previously talked about the 34,000 retail sales for February. If we look now, we can see that 8,400 of that was Model 3, 25,500 was Model Y. So although that's maybe not the most exciting number for Model 3, if we look at this in combination with January, it's about 21,000 quarter to date. Last quarter in total, October, November, December, 3 months, about 25,000. The prior quarter had been about 32,000. You can see Q2 obviously very low with COVID stuff going on. And then back in Q1 last year, what is that? That's probably about 33,000 right there. So Tesla, could be setting up pretty easily for, if we have a strong March in terms of Model 3 retail sales, could be setting up for a record Model 3 retail domestic sales in China for the quarter. So maybe it's not what we would have hoped for after the price cuts, but I think that remains to be seen. I wouldn't necessarily call it disappointing at this point either. Still a lot of the quarter left, and we'll see how that materializes as things come through. But just seeing sort of Model 3 sales not being very good, not sure that that's how I would classify it quite yet. We'll see how March comes in. It's a possibility, but a lot of quarter, again, left to go. We also have the split there for exports. No major callouts there. You can see that the split for exports is heavier towards Model 3 than the ratio for retail sales. So, take that for what it's worth with those previous comments. And then we do have production. So production came in at 72,300 vehicles for February, 20,500 Model 3, and about 52,000 Model Y. So just like in January, we did have less production than deliveries or sales, and that drew inventory down by 2,000 vehicles. Most of that, or actually more than all of that, from Model 3, which makes sense with the production stoppage that we had towards the end of February. So we'll see, hopefully, or I guess my expectation would be that inventory would then increase. For March, we'll probably have production outpace wholesale sales. So if production is, maintaining, I would hope to see maintaining previous rates that we've seen Tesla hit. I would hope now to see an 80,000 plus number for February, or for March production rather, to close out the quarter if we don't have further stoppages. All right, so also interesting in China, we do have an update on BYD. Sort of a strange headline here from Reuters, they say. Chinese EV competition hots up as BYD offers discounts. So I guess they didn't grammar check that, but looking at the article here, they talk about how BYD has actually cut the price, or is rather, I guess, offering discounts, more technically correct, on a number of different of their models, including the Seal EV, which this is a newer offering from BYD. We talked about the Han and the Seal earlier this week, and I said, I don't know necessarily enough about BYD to say for sure that what looked like a pretty significant decline in both Han and Seal EVs so far quarter to date at this point in Q4. With this discount now being offered on the Seal, it would seem more like it's a demand-related thing rather than something related with production. So they've added an 8,888 RMB discount, which is just under $1,300 US. So be very interesting to keep an eye on that and see if that sort of trend, downtrend for both the Han and the Seal, continues through March. All right. Other update on BYD. This one I have not been able to confirm. Zhang Wen on Twitter posting an update and saying that a store for BYD has been ordered by regulators in China to make an apology to Tesla for basically unfair competition. I think what this dealership was doing, or what the store was doing, spreading misinformation about Teslas. So probably not super uncommon in terms of a tactic for a store, whether that's corporate led or not, obviously not sure on. This person did share a link to it, but unfortunately the link doesn't appear to be working, so kind of have to take it with a little bit of a grain of salt, but also kind of interesting to see that out there today. All right, next we've got an update on Giga Mexico. Tesla has listed a number of different job postings for Giga Mexico already. We can see here, GFMX right there for supervisors for access control, a number of different logistics and sort of management positions that Tesla has listed here. So exciting to see that already get underway. Hopefully we'll see by the end of this month a little bit more concrete information on when exactly this is going to happen for Tesla. Then sort of the last Tesla thing today is an article from Reuters talking about how Tesla has tapped into Asian supply partners to address 4680 battery concerns. The article doesn't really talk about battery concerns. It more just talked about potential partnerships with 3 different Asian companies. To me, it seemed more like kind of hyping up those companies than really anything to do with Tesla, so we won't go into much detail on that. And then lastly, just kind of an interesting point. This is on GPT-4, so OpenAI's ChatGPT is based on GPT-3. Microsoft has a big stake in OpenAI. GPT-4 is apparently going to be sort of announced at an event next week. So I think Microsoft's got an event on March 16th. This was sort of slipped in at a presentation in Germany by the Microsoft Germany CTO. I don't think it was intended to be sort of the big announcement for GPT-4, but sounds like we'll probably be getting a little bit more information on that next week, which is obviously a pretty fascinating time in that space right now. I know I said lastly, but just quickly looking at the calendar for next week, we will have, of course, the consumer price index on Tuesday, and then the producer price index on Wednesday. On top of all the stuff with in the banking industry, definitely going to be an interesting week next week. All right, that'll wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you on Monday for the March 13th episode of Tesla Daily. Thank you.